Hey everyone, how's it going? This is Richard and welcome back to another stock market outlook video sponsored by MarketSmith. As always, we'll run through the major indexes and also talk about some key stocks to watch. And at the very end of the video, I'll kind of give you my overall take on the health and breadth of the current market. With that said, let's start off with the Nasdaq Composite. And if at any time during the video you do enjoy my analysis and find it helpful, please go ahead and take the time to leave a like down below on the video. Just takes a few seconds. And of course, subscribe if you want to see more videos just like this one every single weekend, as well as tutorials and interviews with top traders and investors. So looking first at the daily time frame of the Nasdaq Composite, you can see that we had a very negative reaction, of course, to the most recent Fed meeting. We were rejected near that 50 SMA area, and we're back below a declining 21, 50, and 200 SMA. So essentially the trend is down on most timeframes. We did have a decent Friday reaction, but right now we're in a short-term down cycle within the overall longer-term bear market. And just going to a weekly chart, this gives you a little bit of a perspective. You can see that, one move down, second wave down, third move down, and then a very negative week once again. And we remain below that longer-term moving average. Going to a monthly, this gives you a sense of, the destruction that we've seen so far, as well as the potential. This is back in the 2000 area, 2008, and the most recent significant bear market is what we're currently going through. Inside month so far, but yeah, no signs yet that a true bottom is in. We just kind of have to go flat, kind of lose that downside momentum, and then move back up the right-hand side of the space eventually. And watching the indexes as well as the leadership that's available at the time will give us hints about that before it really gets underway, so we can profit from that new uptrend. Going over to a 60-minute time frame, you can see kind of the short-term action. We had that very negative reaction where we moved up initially, completely reversed, undercut this low as well as this low here. And now we're just kind of back in this chop and basically forming a flag of sorts within the context of a short-term downtrend. So right now, in terms of how I'm viewing things, we're basically back in a downtrend. It's time to be very careful, even if you're a swing trader, position trader, and just kind of wait for those setups to appear and wait for some, stabilization to happen with this index. Looking at the S&P 500, this is very similar, negative reaction. This index is a little bit stronger. You can see we're pretty close to that 21 EMA, still below a declining 50 SMA, and we were rejected near this area once again. This will be a key level back here, 3,800. So we'll see how we act here. Yeah, this low is definitely significant. And if we undertake or undercut that level, I wouldn't be surprised to see us back near this level or even challenging these prior lows. Going back to the NASDAQ real quick, you can see how much weaker this is. We're much closer to this prior low, and we've already undercut this level right here. Looking at the Dow Jones, this is the first time in a while I've kind of picked this up, but because this index actually has been leading, which isn't a great sign for growth stocks and kind of aggressive trading, because the stocks in this index aren't the most growth heavy. They're much more kind of value focused, and we rallied all the way to the 200 SMA, and now we're rejected there. We were rejected just barely at the end of the day on this past Friday, but we'll have to see whether we build some sort of structure here, form a higher low setup, push through that level, or if we continue to roll over and get back below that 21 EMA, 50 SMA. We don't have to predict. All we have to do is wait and see what actually happens. Looking at the IWM, which is kind of the Russell 2000 index, you can see this is also a little bit stronger, quite a bit stronger than the Nasdaq Composite. We're above a rising 21 EMA, we're above a declining 50 SMA, and we were rejected right near that 200 SMA area, which has been resistance a few times in the past. This is pretty close, and this is right on the dot. And yeah, I'd love to see us kind of build here, form a higher low setup, maybe even a longer term basing pattern, and then kind of move upwards. But we could also obviously kind of get rejected and continue to roll over and challenge these prior lows. We'll just have to see what happens here. And if you go back and study history, especially with these longer term bear markets, before that final bottom is in, or even after that final bottom is in, there's a lot of head fakes, a lot of sideways choppy action where, the market is just trying to figure it out. Supply is being absorbed, new buyers are stepping in, but there's still people selling. So it just becomes a chop fest, and it's really tough to really ride any trend because there isn't really one even after that bottom is put in. So be patient, wait for those setups where you can really manage risk tightly and also size things up. We're not going to miss the bottom. And even if we do, in the next few weeks, there's going to be tremendous opportunities. We just have to be ready and make sure we're preserving our capital during this more sideways heavy choppy market, which can easily, lead to a lot of paper cuts, a lot of frustration as well. You'll kind of lose that mental capital. So be patient and just, prepare yourself and think of the good times that are going to be ahead once, this market really does start a new bull market. There's going to be some amazing opportunities, some amazing market leaders that are going to, double, triple, quadruple, 10x even. And we just have to be ready and, keep an eye out for them. So that's the IWM. Looking at the IWO, which is Russell 2000 growth. This is also quite a bit stronger than the NASDAQ, but we're right at the 50 SMA. Looks like we are either right below or, right at that 21 EMA, which looks to be rising, but we remain below a declining 200 SMA, and we're rejected at that on this day right here, which would have been the 1st of November. Looking at the FFTY, this was rejected at the 50 SMA. We're right above, it looks like, a rising 21 EMA, but this is once again just longer term downtrend, and we're really going to have to build sideways for quite some time to let that 200 SMA kind of curl up under price and potentially start a new stage 2 uptrend. So that's pretty much it for most of the indexes. Let's take a look at ARK just because. And you can see this is very negative. This remains a pretty weak index with a lot of broken stocks within it. And speaking of that, we've got Twilio as a great example of why even when you think a stock is extremely cheap, it's dropped 80%, it can still drop a hell of a lot further. And this dropped, I think, 43% near the lows. It looks like it was down 34% at the end of the day. So just wait for that stage 1 base to really take hold and wait for that stage 2 uptrend to begin again before you even consider these stocks that have dropped incredibly far. And even if they do move up, they're going to move up a lot slower because, they're later in their growth cycle. There's a lot of overhead supply kind of holding the stock back and a lot of potential resistance. So try to focus on new names that you haven't really heard of, but have those promising characteristics that are trading near all-time highs, that have great earnings growth, sales growth, return on equity, all those kind of can some characteristics, and have that N factor as well. That's so key. And even more important than that is to basically have, momentum of not only that stock, but also the sector and industry group behind you. And that way you've got kind of all the probabilities in your favor. And I promise you those type of opportunities are going to show up. We just have to wait and be patient. So that's a great reminder. Even Roku, which rallied super strongly off the lows, you can see, how badly this has gotten destroyed. And I think it even closed near the highs. You can't even see it because it's so squished here. But it really just has to start a stage 1 basing process that could last months, years. No one really knows. Who knows if it's even ever going to retake this high again. If you look back in history, there's a lot of prior leaders that never did. So don't think you can buy it forward because it's cheap, because when it gets back up to 400, it's going to be a 10x. You don't know that's going to happen. There's no certainties here. And this type of selling to me says there's a lot of big institutions that have changed their mind about having their sizing in this name, and they're basically distributing stock. And that's similar to what's happening with Meta. You can see the character change here, slow grind upwards, higher highs, higher lows, and then that's completely flipped. And this remains one of the weakest stocks in the market. You can see even last week, we continued down, and there's no kind of bottoming process, stage 1 basing process in the process just yet. So going back to a daily chart, yes, this continues to move down since that earnings report, and remains below all the key moving averages. Looking up Tesla, this is below the key moving averages. Apple is also below all the key moving averages, and a lot of them have kind of significant lows that they're kind of approaching. Going back to Tesla, this is a pretty key level right here. So we'll have to see what happens if we push below that. Negative downside reversal on Friday, so be aware of that. And you can see it was rejected at that declining 21 EMA, very bad close on this day, which would have been the 1st. Looking at Google, this is also very negative, maybe even stretch to the downside here. But even a rally here, back into a declining 21 EMA is prone to failure and just remains within a longer term downtrend, needs a lot of time. And all these mega cap tech stocks are getting hit extremely hard. So we'll have to see if, this is the last move down because the generals are finally getting hit, or just, we'll have to see what happens basically. So other than that, let's take a look at Netflix as well. This was faring a little bit better, but we've undercut this low here. So it just needs kind of a basing process. But once again, this is above a rising 50 SMA. So it's faring a lot better than the other mega cap tech stocks. But, just needs time. And you can see the RS is taking a dive a little bit, looking at the RS line. Taking a look at NVIDIA to get a sense of the chip stocks. This is actually faring better than most. And taking a look at SMH, this showed a little bit of relative strength last week, potentially forming in a higher low right here. RS is moving up on Friday, but we remain below declining 50 and 200 SMA. So that's pretty much it for those key stocks I wanted to bring up. So going back to the S&P 500, very negative action after that Fed reversal, as we've seen really the entirety of this year. And we remain pretty negative on all the indexes. There's not too much out there outside of, oil names, biotech. So once again, it's time to be patient and wait for those setups to appear. And when they do, I'll make sure to let you guys know, and I'll be posting my weekly watch list tomorrow. So make sure you guys stay, aware of that. And if you did enjoy this video, please go ahead and leave a like down below, subscribe if you're new, and I'll see you guys in future videos. Take care.